I was reading the news where it says that more homeowners are now refinancing their home loans as the interest rates are dropping to a 3-year low. And this is exactly what I want to discuss today, because you would realize that most Singaporean homeowners, they will just stick with the HDB loan of 2.6% per annum, which is the default option. But I'm very sure that with this news, you would have realized that home loan rates are dropping, and some of you may be deciding that, should I really go and refinance to a bank loan over the HDB loan? And this was exactly what I did when I was deciding whether I should refinance. And I did it with a platform called Cashew.sg, a mortgage broker based in Singapore where I can compare the home loan rates side by side. That was when I realized that I was probably overpaying. And they are the video sponsor for today, and hence I will share my own process of how I refinance my home loan through Cashew. And after comparing a few packages, I finally decided on the 1.8% fixed bank loan. And this interest rate was a few months back already. So the good news is, by the time you watch this video, the rates would have been even lower. So in today's video, I'll break down the calculation, the numbers, the fees, and we'll share with you why I finally decided to refinance from a HDB loan to a bank loan. And if you have further questions on property calculations, home loan rates, then feel free to join us on our 22,000 member Telegram group at HoneyMoney.sg. Now, to provide some background for context, I collected my HDB keys, which is a BTO, in 2024. That was last year. And at that time of key collection, I applied for the standard HDB loan, which is 2.6%. So my current outstanding home mortgage is around $230,000 with a remaining tenure of 24 years, and the monthly installment is around 1.1k Singapore dollars. And my minimum occupation period, or you call it MOP, is till 2029. So if I want to refinance, the loan should fit within that timeline. Now, the thing about refinancing to a bank loan is that if the loan quantum is too small, then it may not justify the time and effort and even savings, because the bigger the loan, the more savings that you will enjoy. But I used Cashew's refinance calculator, and they calculated that even for a small home loan of around $200,000 for mine, it still have potential savings. So I decided to dive in deeper down the rabbit hole of home loan. But I do want to urge new homeowners who are buying HDB is that if you're undecided, it's always good to start with a HDB loan even at 2.6% first, because the down payment can be fully paid by the CPF. Whereas if you go through a bank loan, you need to pay at least 5% cash and 20% can be paid via your CPF. Then once after collecting your keys, you can then decide whether you want to refinance to a bank loan. Because this was exactly what I did 1 year ago. When I got the keys, it was under HDB loan, because back then the bank loan rates were not so great, correct? Then 1 year later, I looked, bank loan rates look very favorable. So that's when I decided to make the switch. So you can consider this kind of time frame as well. But let's take a look at the current market rates, because home loan rates are really based on the Singapore SORA rate. By Q4 2025, based on the DBS report, the 3-month SORA averaged around 1.4% to 1.5%. And most of the bank packages are really offering a home loan rate below 2% per annum. Now, I know what some of you are thinking. Aren't we in a falling interest rate environment, and the Federal Reserve will continue to cut interest rates? Hence, we should wait further and further until interest rates cut to an all-time low, then we start to refinance. I mean, sure, you can time the market and go for the all-time low if you're really that confident. But if we look at the current numbers, we are nearer to an all-time low rather than an all-time high. So you need to take a look at the potential upside versus the potential downside. How much are you further away? And don't forget that refinancing your loan is not just a one-click button and it will be effective the next day. Even though you lock in the rates within this week, the real refinance loan will only kickstart like a few months later, after all the legal processes, the documents are all handled professionally. So it's not like immediate you get the savings, So there is definitely an opportunity cost of waiting, and you will still continue to pay this 2.6% from HDB loan. Therefore, my honest advice is don't wait too long. If you felt that the current numbers are really good enough, then you can make the switch. You won't lose out too much. On Cashew's HDB to bank refinance page, you can see that the best rates range around 1.5%, while HDB loan is pegged to 2.6%. So that's quite a significant savings, right? More than 1% per annum. Cashews too showed that even a 20-year loan of around $500,000 at 1.55% could save around $3,000 per year. So that's the savings you get when you switch from a 2.6% HDB loan. Now I will talk about some packages that I compared on Cashew's platform. And for those of you who are refinancing, there are two types of packages. One is fixed, one is floating. So floating rate is generally determined by the current SORA plus a markup percent. Whereas for a fixed rate, the number will not change for a fixed period, and after that, it will be floating. So for my own situation, since I'm within the MOP of 5 years, I think going for a fix is a better idea. And for my case of 200 plus thousand of home loan, I got a 1.8% loan for a fixed 3-year period. So to me, there's a good balance between rate stability and flexibility. And I think what I really like about Cashew comparison page is that it is really straightforward. All the rates, the lock-ins and the conditions are stated side by side on one page. So you don't have to go to like multiple pages and do the comparison yourself. You can already see it quite clearly on Cashew's page. And I shall explain further why I finally decided to go with a 1.8% fixed rate. Because like I mentioned earlier, if you are going for a smaller quantum home loan around 200 plus thousand, you don't really get the best rates. Alright, so depending on your loan quantum, you may not get the headline promotional rate. So you have to key in the numbers yourself. Then Cashew will compare that for you. Larger loans also get full legal subsidies, while smaller loans like mine may get partial subsidy. So depending on your package. Now, despite that, I still went for the DBS fixed 1.8% loan, and it made good sense for me because it was a fixed term of 3 years that is within my MOP timeline, and I'm not expected to sell within the next 3 years anyway. Also, I checked with the loan officer and confirmed that if I sign for loan with DBS, it will qualify for my POSB cashback bonus under the home loan scheme, where I can enjoy a 3% cashback on my monthly installment capped at $30 per month. This effectively reduces my net interest paid and is one of the lowest cost of debts available. One more thing, I also stretched my loan tenor from the remaining 24 years to the maximum 27 years, and you can only do that when you refinance because the default HDB loan, the maximum tenor is only 25 years. I do that because I fully understand the use of good debts, and I understand that this will help me optimize the cash flow, but I realize that this may not be good for some of you, so do take your own actions. My rationale is that at 1.8%, the cost of borrowing is much cheaper than inflation, which average around 2 to 3% per year, and far below my investment portfolio return of average 10% per year. So keeping more capital invested make better financial sense for me, but it may not be for you. So you need to take a look at your own situation, whether it fits. So after talking so much about the theory, let's talk about the numbers now, the breakdown. My current HDB loan at 2.6%, I'm paying around $1,102 per month. After refinancing to a bank loan at 1.8% and stretching the tenor to 27 years, my monthly repayment will be at $920 per month. So if you look at my cash flow savings, it is at around $182 per month, or roughly 2.2k per year. Total savings over 3 years is around 6.6 thousand Singapore dollars. But don't forget that there are also additional fees like the legal and valuation fees, which is partially subsidized for my home loan quantum. So if you have a higher home loan, this may be fully subsidized for you. So after deducting all the legal and valuation fees, the net benefits still come up to around $6,000. And this is even before the POSB cashback bonus. So there's another sweet spot. But if you don't know how to calculate all this, then Cashew's refinance calculator really make it simple for you. And it helped me simulate all these numbers based on my current situation. So now I'll share the start to end process, how I refinance through Cashew, and it's really simple. First of all, I sign up with a Cashew account, and at the platform, I key in all my numbers, which is my loan amount and remaining tenor, and I got instant rate comparisons from over 500 packages. A mortgage consultant follow up with a WhatsApp message to explain the difference between the fixed and floating rate options, and I must comment that he was not pushy at all. He was more from an educational standpoint, just answering my questions as it was my first refinance experience. And the application was fully handled end to end, including coordination with the bank and the law firm. And to be clear, there are zero agent fees because Cashew will be paid by the banks themselves. Okay, so they earn a commission from them and not from you. So there's nothing deducted from you to pay to Cashew. You will pay the legal and valuation fees, which everyone must pay unless they are fully subsidized. Cashew even offer cash rewards up to $3,500 plus legal fee subsidies up to $3,000 depending on the loan size. Everything was free, transparent and updated in real time, and be sure to check the updated rates because they refresh very frequently. So if you want to refinance your current home loan, I strongly recommend Cashew. Check the link in description to get started with Cashew today, and thank you Cashew for sponsoring this video. So after refinancing, let's talk about the strategy going forward from now till 2028, because that's when after 3 years my fixed rate would expire and change to a floating rate. So by 2028, I'll likely reprice to a new package under the same bank. So there's a difference between refinancing and repricing, and I'm sure Cashew can help with that too. Then by 2029, I can then decide after my MOP whether I should continue staying in this HDB flat, or when I choose to sell it, check with the bank that there will be no redemption penalty. If I continue staying in this HDB, I'll simply reprice again after every few years to keep competitive. But I'm very sure that even after I present so much and talk so much about the calculations, some of you will still continue to stay with the HDB loan at 2.6%. And there's totally nothing wrong, because I understand that the HDB loan is government-backed, stable, and requires no additional legal fees or setup. There's no lock-in period, and the CPF deductions are automatic. Although you can also pay your refinance bank loan via CPF as well, that is not the problem. So if your loan is really small, say under $200,000, the potential savings you'll get from refinancing to a bank loan is really not much. And refinancing may not justify the effort because there are additional fees involved, like I said, the legal and valuation fees, and you don't get a full subsidy as well. Then some people also prefer to have the peace of mind that the rate will never change and keep staying at 2.6%. So I totally understand that. But remember what I always say, peace of mind always comes at a cost. It's whether this cost of having a peace of mind is more expensive than the cost to switch. And in this case, it's the additional cost of that 2.6% HDB home loan. You are expected to pay more interest because you are now having a higher interest rate loan if you continue to stay put. So that's the trade-off that you have to decide, whether refinancing to a bank loan is suitable for you, or should you decide to stay put with a HDB loan. This is something you have to accept. So some final takeaway for my whole refinancing process from a HDB loan to a bank loan. From 2.6% to 1.8%, that's around a 0.8% per annum savings. It reduced my monthly installment by around $200, and over the fixed term, it saved me around $6,000. That is the net benefit after the 3-year lock-in period. And that's not even accounting that the POSB cashback bonus can earn me additional 3% cashback every month, capped at $30, and it's going to bring down the interest cost even further. And how I compare all these rates is through Cashew, so you just have to sign up for an account and you can put in your numbers. The loan rates will be transparently shown to you without having you provide additional information. Then after that, you can compare around different packages and apply through Cashew's platform itself. Cashew's WhatsApp assistant and AI comparison tool make it easy for everyone, even if you're not sure what to pick. If you're still paying 2.6% on your HDB home loan, you are definitely overpaying with the current market interest rates. So I urge everyone, especially HDB homeowners, to really go and check your numbers on Cashew platform, compare it to the current monthly installment that you are paying, or if you really need someone to advise you, then have a friendly chat with their advisor through WhatsApp. And you will then get a free comparison so that you can compare the numbers, then you go and decide later. Lastly, if you're expected to shift houses by a certain date, for example, after your MOP, which is like a maximum of 5 years away, then you should definitely consider to switch to a bank loan, because you know that your housing conditions will not change. And especially with home loan rates now going for as low as 1.5%, you have guaranteed savings. But be sure to check with the bank loan whether it has a waiver of early redemption penalties in the case of the sale. And if you want to check out an earlier video where I did a property versus stocks comparison, then you can take a look at this video right here.